Rafi, oil is on a downward path as of late. Should investors be nervous?
Yeah, I think you and I chatted just as summer was heading in, and you asked about what the summer looked like. And I said, oil prices are going to go up and they're going to go down and they're going to go up and down. And we just, in the short term, I don't think anybody should be really concerned. The headlines and a lot of the, the pundits that are trying to drive prices down are really looking at the moment in time right now, and we're getting caught up in all of the events that are occurring today that are very short term. Even the fixes are very short term. We've been looking, and a lot of our peers even, and a lot of the banks are doing a lot of good research today, trying to understand the fundamentals and what does the future hold. And it just looks like a very dire situation in terms of power prices. We see them going a lot higher over the next couple of years. We just do not see any fundamental spending change globally to try to add to the supply. And that is what we really need to focus on. Everybody's focused on short-term demand, and that is very concerning to us. So as the price corrects and it takes this equities down, we would be buying into this weakness.
Let's get into some recent events as they pertain to Canada's energy landscape. Our Prime Minister hosting the Chancellor of Germany, Olaf Scholz, signing a hydrogen agreement that I guess will start in 2025. But the Prime Minister is not sold on LNG exports. Can you make the case, Rafi?
Yeah, I mean, he's not sold on something that's tried and true, but he is sold on something that is unproven. And I think that's been the problem for quite some time now. I think Canadians and the market in general have been misled by the risk of the new technologies and the state that they're in right now. And to be committing to billions of dollars in these projects that are very, very high risk, very experimental, I think is, I would say it's irresponsible to be doing something like that at his level of, and the kind of, talking to the Chancellor of Germany. And I mean, the energy needs were not addressed at all by the energy industry. Nobody in the energy industry was addressed or talked to about it. Nobody has been had any discussions with the Prime Minister to help understand why he is saying it's uneconomic, so we can debate that. And that has a lot to do with the fact that they've kind of shrunk the exposure of energy in the government now. There's no real energy minister to talk, so that was also concerning to us. They've kind of eliminated the ability for energy, the conventional energy, to have an influence for global security issues. And I would argue that that's a problem. Canada needs to have a much higher influence on the OECD world to help us eliminate security issues. We're producing only 30 million barrels and we consume 45 million barrels in the global market. And so our oil and gas needs to have an influence more, and that was not addressed properly. So it was very odd to us that these billions of dollars were promised through these experiments, and yet the oil and gas industry, which clearly should have a very significant influence on these security issues, was not addressed at all. You could even argue, just look at the influence of the energy industry on our own exchange, the S&P. It's 20% of the index, and it's the largest exposure in the index in any of the free world markets. So clearly oil and gas has a huge influence on our economy, and it will have an influence on the global security of the markets. And for our government not to bring up any of that in terms of how it could help, I think that probably ultimately just disappointed the Chancellor, frankly.
Let's talk about that investment, or lack thereof, I should say, when it comes to Canada's energy sector. How do you see that playing out on a go forward basis? Do you expect to see M&A activity given the environment?
Yeah, Larissa, I think it will be M&A consolidation. I do not think the industry will go back to the manner in which it was developed. It was developed in an exploitation type environment. Canadians should pat themselves on the back. We've got 40 years of very aggressive technology growth, leading edge growth in volumes and technology, to ultimately now have an enormous producing field of gas and oil, opportunity in gas and oil, at a time when the world needs it desperately. Prices are high. The industry has slowed its growth organically, and now with higher prices, this production is starting to reap huge rewards, both for the producers and now for our government and ultimately Canadians. You'll see royalties in Alberta skyrocketing to 4 or 5 times what they typically are. There's going to be taxation in the industry that the federal government's going to benefit from. So 40 years hence, you look back, Canadians should be proud of this industry. It will not grow aggressively in terms of its size without government sanctioning more expansion in oil sands. Until that happens, we're just going to be a cash cow.
Rafi, you had touched on supply at the beginning of this conversation. OPEC recently announcing output cuts. What is that domino effect?
Yeah, obviously it wasn't a significant cut, being 100,000 barrels. They just took what Biden asked for a month ago and they eliminated it. The vast majority, I think all but 3 of the OPEC members, are already not even producing their quota. They're not producing, they're missing their quota by 3 million barrels total, all of OPEC. So the only ones that will actually physically cut are Qatar, Saudi, and UAE, I believe. And the rest are just saying, well, let's cut so that we can get back to what we're supposed to be producing. They will do this. And I think that anybody that thinks that oil prices are going lower, they do not believe that OPEC will cut. And we believe the opposite, for the simple reason that why would they, cut off the hand that's feeding them? So they need to eliminate the supply. It gives them, by taking barrels out of the market, it actually gives OPEC more strength in this environment. Without the rest of the world spending money on growing volumes elsewhere, OPEC will regain control if they can pull barrels out of the market. So they're at a huge advantage doing that. And they just sent a very, very significant message to the market that they're willing to do it. So we need to be very careful of that and recognize we believe, and it's not easy to figure out, that OPEC wants oil prices somewhere between $90 and $100 a barrel. I will tell you that they're, a normal to cold winter this winter will probably shoot prices a lot higher than that. And we have to be very careful of prices actually getting beyond 120 and starting to affect economies globally. We've seen clearly that oil prices affect the gasoline price, affects the price at the pump, and that seems to be directly correlated to the economies. So very, very concerning at this point to us. 6 or 8 months from now, if winter comes in with any kind of fury, that oil prices get out of hand and screw up the economy.
Rafi, lastly, you had touched on global energy security, countries around the world trying to get away from their reliance on Russia's oil and gas. How much of a concern, how much do you think about global energy security now?
We think about it a lot. We think about it more like the deglobalization that occurs and possibly the 2-tiered pricing that will happen. You're going to see probably like I said earlier, 30 million barrels is what we produce, and we consume 45 in the OECD. Well, the opposite is the case for the non-OECD. They produce way more than they consume. And so they're going to sell their oil to themselves cheaper. And I think the OECD world, it's going to be more expensive for us to operate. And that's why I think people, investors, should be exposed to the sector, because that will be the way for you to directly, and it will literally be a direct correlation with the costs that they will incur. Our costs are going higher on our everyday living and our travel, all of it. And the way to eliminate that in the OECD world is to own the energy sector. And we think Canada in particular, being 20% of the index, energy is now, I think the world is going to recognize that this is the best way to own energy in the free world, and you'll see funds flow into our sector as a result. So that security risk that we have will correlate into great returns in the Canadian energy market, we think.